Here we actually have some photos of the farm. These were taken earlier this week. You'll see the corn crop in the background is drying off, and it's going to be harvested here in the next few weeks. The corn stalk actually dies off before the cob itself is harvested, so that's the process you see occurring here in these photos. Moving into a overhead view of the property, we do see its proximity to the Chicago metropolitan area here, and if we zoom in a little bit, we'll see that it's really on the outer ring suburbs of the Chicago metro area. The town you see immediately to the west or the left of the screen is DeKalb, Illinois. It's actually where a large seed producer is located, DeKalb Seed. So this is definitely the heart of farming country in Illinois. So on our summary page here, this is a 163-acre farm. The majority of it is tillable, over 99%. We're only 35 miles west of Chicago O'Hare. I'm sure many of you have flown in and out of there before. You'll see the particulars of the offering below in terms of the cost per acre. One important note about this farm is there is a flex lease arrangement in place. So what that means is there will be a cash floor paid every year on the property, and then a shared upside between investors and the farmer should either commodity prices improve or crop yields improve. So that's why you'll see a range presented here for the gross capitalization or the annual yield on the property. That range is reflective of, at the lower end, the cash floor, and at the higher end, the maximal value for the flex lease arrangement. And one last consideration is that, and we're going to get into detail about this in a later slide, is that the final cost per acre may actually be revised downward after acquisition, depending the results of a wetlands determination. So in no case will the price per acre for investors increase. It can only go down, and that difference would be paid back out to investors in the first year's distribution. But again, we'll cover that in further detail. So getting a sort of landscape view or benchmark of land values for the area, this particular part of Illinois is defined by the Illinois chapter of the American Society of Farm Managers and Rural Appraisers. We use their guide quite frequently and is commonly used in land transactions in the area. They classify this as Region 1 of Illinois. We see the highest land values in the state in this area. That's driven, number one, by excellent quality soils, which this farm does possess, a large farmer community and tenant base, as well as urban development pressures. Again, we're very close to the Chicago metro area, and this property does in fact possess frontage on a state highway as well as a metro rail line that runs on the north side of the farm. So down at the bottom, you'll see where this farm falls in the Illinois Region 1 pricing range. So we're actually right below what they typically put as the range for excellent productivity farms, of which this farm qualifies with a productivity index score of 135. Here is just one more visible shot of the sort of over the years, the development of Chicago metro area towards the subject property, which is highlighted in green on sort of the left side of your screen.
And Ben, it seems like on the left side we're 2005, and is the right side is present day. Is that correct?
That's correct. Yes.
Okay, thanks.
And so moving on, we're going to get into that paradigm that Garrett outlined earlier of soil, water, and financial profile. And we do this for all of our farms. If you've tuned into previous webinars, you'll have seen us use this before. I think it's a really helpful tool to help think through underwriting decisions and processes on a particular acquisition. So starting with the soil, as we discussed already, the productivity index on this farm is quite high. It's 135. The highest possible range on the value scale is 147. The Society of Farm Managers and Rural Appraisers rates that as an excellent soil quality. But it is important to keep in mind that productivity index is really only part of the picture when you're talking about soil quality. There are other things that go into that, whether it be the farm shape, the slope of the fields, or even the specific soil types present on a property. So that's another thing that we like about this farm. So the productivity index is high, we know that, but the predominant soil on this farm is actually drummer. So drummer is, the state soil of Illinois, and part of the reason that is so is because it's known for being highly productive. It's sought after by farmers because it can yield a higher per acre average yield of corn or soybeans in this case. Moving on to the water portion of the discussion, in the farms in the Southeast that you'll see on our website, we frequently talk about irrigation projects. On this farm, we're going to be talking actually about getting water off of the property. Because the soil is so productive on this property, it has a higher amount of organic matter. That's great for crop production, but it means the soils are heavier in a sense, and they require some drainage for optimal performance. On this farm, we want to be sure that the areas we improve are not disturbing wetlands habitat. So to prevent that, we will perform a voluntary wetlands determination, and that's actually coordinated through the Farm Service Agency, which is a branch of the United States Department of Agriculture. There are two potential outcomes for investors in this wetlands determination process. So to begin with, in our negotiations, we've set aside from the seller $3,000 per acre for each of the 15 acres in question that will be held back in escrow after the closing process by the title company. In the first scenario, if no wetlands are determined or no wetlands are found on the property, the $3,000 per acre is released from the escrow account back to the seller, and the acreage is deemed farmable. Should there be any wetlands found on the property, for each acre that is determined to be wetlands, $3,000 per acre is retained by the investors or the entity and partially used to remediate the area that's not farmable, and the balance is then paid back out to investors, again, at that first distribution. So what this will do is actually lower the effective basis price of the acquisition. So moving finally to our financial profile, I wanted to start with the flex lease arrangement and detailing that a little bit, just because it may be new to some folks listening on the webinar. We've done flex leases on previous AcreTrader acquisitions, a few in Iowa, Illinois, and one in Minnesota. So I'm just going to dive into it quickly here. We have two items on the screen. On the left, you have the actual production history of this specific farm for both corn and soybeans. So if you look at those average yields over the last 4 or 5 years trending, those are really good crop yields. So the average corn yield in the United States is 180 bushels per acre. So this is 40 bushels an acre higher than that. And the average soybean yield is 53 bushels per acre. So again, about 20 bushels higher than that on the soybean side. This farm far outperforms normal crop yields is what we can conclude from that. And this is why we pursued a flex lease arrangement. We have a great farmer with strong historical yields on high quality soils. We believe that is a good combination and a winning combination for our investors. What we have done on the right side of the screen here is actually put together a sensitivity table that maps out a couple different outcomes for investors in terms of per acre rent. So if you recall, we have $280 per acre as our base rent or our floor rent. And the other numbers are potential outcomes should commodity prices or crop yields improve. So what we've done here is bracketed in red a few potential ranges that could be realized should the farm produce at its historical average yields. The price ranges that we used, we feel are somewhat conservative. These are more or less in line with today's prices for corn and soybeans, which are quite low by historical standards. And so that in that sense, we do feel like these ranges are somewhat conservative. Moving to the final slide here on our financial overview, you'll find all the offering details here. There is a minimum investment per usual. It's 25 shares. That'll equate to about $22,175 for each minimum investment. To recap what we like about this farm as you look over these different ranges on gross capitalization and net cap rate, this has some of the best soils in the country with average crop yields that are far above the national averages. We have negotiated a structure that protects downside in the event of a positive wetlands determination. And the farm is located in a rapidly urbanizing area with road frontage on a major commuter rail line as well as a state highway.